Hey guys, this is Matthew from Crypto Traders and Crypto Traders Pro. In this video, we're going to be covering my personal investment strategy for 2019. Now, for you guys that have been following along for a while, you would know that this channel is primarily focused on cryptocurrency, trading cryptocurrency, and the entire cryptocurrency markets as a whole, but I do branch off into different asset classes for my overall greater portfolio. I'm not entirely 100% in cryptocurrency. At one point I almost was, but since then I have diversified over the past couple years outside of cryptocurrency into various other asset classes. And before we head into my personal investment strategy for 2019, I think you guys need a little bit of context about me. So my story started in 2012 when I first started trading penny stocks. Now, a lot of people do not like penny stocks. They think it's too risky, there's a lot of scams, and that's very true, but this is how I first got started into trading. And this happened in 2012 when Colorado first legalized marijuana. I thought this was a great opportunity to invest in some pot stocks, and it was, but I did end up losing almost all of my money on my very first trade by trying to follow a pump and dump. I didn't know it was a pump and dump at the time, but as I got some experience, I realized it was a pump and dump. I bought into a penny stock where this guy was promoting and saying it was going to be the next big thing, and it turns out it wasn't. I saw my $2,500 investment go all the way up to $15,000. I did not cash out, and I watched it dwindle away all the way down to $600 before I finally cut it and left and decided, you know, this is not how I'm supposed to be trading. So I took a few months off. I was working at the time. I redeposited $3,000 into a new account probably about 6 months later or so, and I tried again. And this time I really wanted to learn how to trade correctly because I knew there were people out there that were successful traders. I knew it wasn't impossible, and if they could do it, I knew I can. So I decided to learn the real way. Now, at this time, and this was again probably 6-7 years ago now, I was really focused on the new technology coming, and I figured if I could get on these hype trains before they really took off, I knew I'd be able to make a lot of money. 3D printing was one of those. So pot stocks, then I moved to 3D printing. These were two big ones that I knew these sectors were going to really take off because I knew more states were going to start legalizing marijuana. I knew 3D printing was going to start getting bigger and bigger. And I was focused on these different sectors in the stock market. I'd buy, I'd hold them for a little bit, I'd sell them, take profits. And from there, I kind of transitioned into day trading because I knew that wasn't going to grow my account as quickly as I had liked. I didn't have a large amount. I only had $3,000 or so. So I began day trading and learning really how to spot the patterns, how to trade the charts, and more so getting into technical analysis rather than more of a long-term investing mentality. So this took several years until I got actually consistently profitable results. It probably took me 4 years before I ever started seeing profit, and these were small wins. It was a couple $100 here, a couple $100 there, but I figured out a couple patterns that I really liked and I was really good at, and I consistently was able to spot in the markets. I'd play those and it was working very well. So I decided to quit my job and go full-time into trading. So at this point, I had started to actually gain some traction. I started getting really good results. Again, I was only focused on the stock market at this time. I was day trading small cap stocks that were under $10. And I realized, you know, I could do this. My job was only getting in the way. I was working a day job. Stock market was only open from 9:30 a.m. until 4 p.m. Then it closed, and I knew with my job it was just getting in the way. I was trying to trade while driving and it wasn't working out. So I knew if I was going to take this seriously, you know, I need to quit the job. And I did. I saved up money for a year and a half. I had some living expenses. I decided to move across the country from Florida to Michigan and pursue this dream of trading full-time. Now, as I got into trading full-time, this was all happening as I was discovering cryptocurrency. So a lot of you guys do know my story that I did place a $500 bet that Donald Trump would become president. This was in May 2016, And of course, in November 2016, I won that bet. I decided to pull out all of my winnings in Bitcoin because it said it was instant, and it said to get a check pulled out, it would be 2 to 4 weeks. I didn't want to wait 2 to 4 weeks. I had heard Bitcoin before. I didn't know what it was, but I heard the name. And obviously, if they were going to let me withdraw in Bitcoin, I figured it was legit. So I withdrew in Bitcoin, and then I had Bitcoin in 2016. So I have this 4 years of trading experience behind me at this time, from 2012 to 2016. So I have this Bitcoin. It wasn't a lot of Bitcoin. It was just over 2 Bitcoin at the time. And I'm researching, learning about it, figuring it out, and I realized that there is a chart attached to Bitcoin, and it looks very similar to the stock market. So long story short, I found Bitcoin, Ethereum, Litecoin. I found all these cryptocurrencies, and I was able to start trading them just like I was stocks. And by early 2017, the stock market was kind of slowing down at this time. There wasn't a lot of action, and I also did not like that it was only open during a set amount of hours, whereas cryptocurrency was 24/7, and it really worked better because I was full-time. I had my entire day to devote to trading, and on the weekends it was kind of boring not being able to trade stocks, so I started to trade crypto. And at first it was more so just half and half, and then I started doing crypto more because this was in 2017 when the market was really getting wild. As you can see on this chart here, 2017 started right here, and it finished somewhere up here. It was a wild ride for crypto, and I got in during a really great time. So that's a little background into my story. And now 2018 kind of passed, and it was a really rough year for crypto. I did do well trading overall once I figured out that, hey, I don't need to store my portfolio in cryptocurrency. I could go into stable coins or cash. I chose stable coins. So this takes us to my personal investment strategy in 2019. I have some experience in the stock market. I have some experience trading cryptocurrency. What else is there out there? Well, let's first cover crypto because this is something that I am going to be investing in 2019. And of course, I've been in crypto for a while now. I have experience. If you're a newcomer, you know, this might be something you want to start paying attention to. That's what I tell everybody. Cryptocurrency is not something to ignore. I'm not going to spoon feed you every person I meet. I'm not going to tell them exactly what to do or exactly what I'm doing in cryptocurrency. I make them aware of cryptocurrency. If they want to know more, great, they could ask me questions, but I don't try and force cryptocurrency on anybody. I just let them know, hey, this is something you do not want to sleep on, and it should be a part of everybody's portfolio because I really do believe this is going to start getting wild again in the next couple of years, and there's going to be some really big opportunity. Now, the chart I have pulled up here is the total cryptocurrency market cap, and as you can see in 2018, we saw a pretty big drop, total about 88 to 90% it has dropped. Now looking at the chart here, there's a few more levels that I'm watching. One is the 2013 high, which is right here in 2013, was the last big bull run prior to 2017, and it stopped right about here. It was a bear market for a couple years and then it picked back up. Now when we had that breakout again, it really hasn't turned back since, and there's a pretty big gap right here where it never really bounced around, had some clear support and resistance levels. It just kind of went straight through to all the way up here. Now, we've come back down quite a ways already, and there's only a couple more big support zones left on the chart that I could imagine the market stops at. One being right where it did. So we did see a bounce here, and this was pretty predictable because it was previous support on the chart. As you can see on this wick, it bounced not dead on the wick, but pretty close to it. There's been some movement lately in the markets. I'm not convinced this is the bottom yet. I do believe the bottom is going to be a double or possible triple bottom before we actually start moving up again. But this is a possibility that this is the bottom, and there is a lot of action going on in the markets right now. Now, something else to consider is the next support level down would be right here at these two lines, which is another 35% drop from this support level right here. So take that into consideration. Again, this is the total cryptocurrency market cap chart. That includes Bitcoin and the thousands of altcoins. So if the entire market drops 35%, I would imagine some coins drop more, some drop less, but overall it's going to be experiencing a drop to get to that next support zone. Now, if that area fails, which I don't think it will, but it is a possibility we have to consider, we could be dropping down significantly down to the 2013 highs, which is another 88% drop from the current prices. So I don't think this is going to happen, but I'm prepared if it does. And I'm more of a trader. I don't do a lot of holding, at least in the bear market. I know when to hold and know when to sit in a cash position. So this is why I'm not 100% in crypto right now, because I don't think it's the right time to be jumping in 100% in crypto again. I think it is pretty risky right now, and I want to wait for sure signs of that double bottom before jumping in head first. So cryptocurrency is going to be a big part of my overall portfolio in 2019, but it's not going to be my entire portfolio, because I do think there are other opportunities out there that are a little more stable and secure rather than cryptocurrency, which is highly volatile and risky, and certainly not for everybody to be jumping in with large amounts of money in. But it really depends on the risk threshold and experience you have as a trader and investor. So that's the first one. We have cryptocurrency. This is going to be making up the majority of my portfolio in 2019. I believe this is something everybody should be paying attention to, and it's no surprise you hear this on this channel, because we are crypto traders. We have one of the largest cryptocurrency trading communities in the world on Facebook and YouTube, Twitter, all that. So we're doing really well. Our community is continuing to grow. We're looking to go to a lot of events for cryptocurrency and even host a lot of events and keep pushing cryptocurrency adoption, because I do believe this is a more efficient system than what we have, and I want to continue to push cryptocurrency adoption all around the world. Now, a lot of people consider the stock market when they're looking at investing or getting started with investing. They turn to the stock market, and this is where I turned, because I didn't know about cryptocurrency back when I started in 2012, but heck, I wish I did, but I didn't. So I started in the stock market. I think a lot of people do end up starting in the stock market or Forex. I don't recommend investing in Forex or trading Forex. I'm not a big fan of Forex at all. I don't think there's a lot of movement there, but stocks, there is a lot of movement. But the current place we're at in the stock market, and this is the S&P 500 1-month chart, so every candle represents 1 month. I do think the stock market is in a very delicate position, and I'm not going to be holding a ton of money in the stock market right now, and I'm not looking to put more money in the stock market right now. I do have a Roth IRA account, which I recommend everybody having, especially if you're just getting started. Open a Roth IRA account. It is a retirement account that you can trade on and invest in, and there's no taxable gains as long as you don't withdraw any money from it until you're, I think 59 and a half is when you're allowed to start withdrawing without experiencing any penalties or paying taxes on it. So I recommend everybody have a Roth IRA account. You could deposit, I believe, $5,500 a year until you're in your 50s, and then I think it doubles. But I recommend everybody get the Roth IRA account. It's very simple to set up. You could do it on E-Trade, TD Ameritrade, any of the brokerage firms or any of the brokerage accounts. You could most likely get a Roth IRA set up. Now, the stock market, again, this is the monthly chart. So a couple things I did want to touch on here, and I'm not going to go through a ton of charts here on the stock market because they do look pretty ugly right now, but this is a clear bearish divergence pattern. And as you can see, the RSI, this is the monthly chart. The RSI was pretty hot, sitting around 89 on the RSI at its highest point right here. Then it had one more peak, a higher high, but the RSI was lower, so a lower high. This is also known as a bearish divergence. As you guys could see right here on the divergence cheat sheet, a bearish divergence is when the price is going up, price is making higher highs, and the indicator, which is the RSI, is making lower highs. So this is a regular bearish divergence and also a sell signal. So I believe there are going to be some good shorting opportunities right now in the stock market. Of course, probably not every stock is going to crash, but I do believe there is going to be some sort of bear market or short-term recession. It's probably not going to be as bad as 2008, 2010, that time, but I do believe we're going to be experiencing some sort of pullback because the stock market has been overextended for a while. We are in a 10+ year bull run, and these things do correct. So take that into consideration. If you're going to go fire up a brokerage account, I don't recommend putting a ton of money in the stock market right now. I think there are far better opportunities out there. So I am going to be investing in the cryptocurrency market. I do have a Roth IRA account, so that's probably about 10% of my total holdings that are going to be in the stock market, in my long-term plays, or just sitting in a cash position waiting to make some trades. Again, I do prefer trading over just long-term investing. I believe actively managing your portfolio will do better than just buying and holding and hoping it goes up forever. Of course, both strategies work for different kinds of people. So a lot of people don't have time or don't understand to read the charts or how to fundamentally analyze a stock or cryptocurrency. A lot of people don't know how to do that, but I have a background where I have been studying this stuff for the last 7-8 years now, and I believe that not necessarily I could outperform the market, but I think I could do better than buy and just hold it and see what happens the next 10 years. I believe actively managing your portfolio, if you know what you're doing, can do better, it will perform better than just buy and hold and hope it goes up. So the last markets that I will be investing in 2019 is real estate. And this is something that I got into in 2018 as I was in the cryptocurrency markets. I had a lot of my net worth in cryptocurrency, and it was kind of just sitting there in like a stable coin position or cash position because I didn't want to hold crypto while it was just dropping and dropping and dropping. So I thought, you know, now is a perfect time during this cryptocurrency bear market to start getting involved in real estate. And I'm not going to sit here and say that I am a total expert on the real estate markets, but I have done a fair bit of research, and I do have a couple of properties that I purchased in 2018, and I'm looking to get more in 2019 because real estate overall is very broad. What I like about real estate is there is a ton of different ways to get involved, much like trading. You could buy commercial properties, you could buy apartment buildings, you could buy shopping malls, you could buy Walgreens, you could buy a single family house, you could buy small multifamily houses, you could invest in a syndication, you could do so many different avenues in real estate. I think there's a ton of opportunity for almost anybody to start getting involved in real estate as long as you're creative and have a little bit of money to get started. I know there's a lot of people that do push real estate saying no money down, no credit, all this stuff, but you can, it's just really hard to get started that way. So I do recommend you have some money saved up if you're looking to get involved in real estate. Now, the one thing about real estate is that it's very geographic. So I have a map here of the United States, and currently where I live is in Michigan. I live pretty close to the city of Detroit, which is a major city in the US. Now, I moved from Florida. I used to live in South Florida down here, pretty much directly across the state from Miami. Both markets are very different. Now, I didn't have a ton of money when I was living in Florida, so I wasn't buying real estate down there, but I did recognize what was going on in the market and the direction it was headed. Now, there are other places in the US, specifically along the coasts, both coasts here, both East and West Coast, that are generally more expensive than the rest of the US. And that means there's not as much opportunity to get really big returns in real estate as there are in other places of the US. In fact, I even know some of the markets on the East and West Coast are actually going to start slowing down right now, or even start dropping over the next couple years, because generally as the stock market starts to come down, people have less money. Interest rates are actually going higher right now in real estate, so all of this means less transactions going on, and prices are going to have to come down because there's less demand from buyers and all this stuff. So the thing about real estate is it's very different for everybody in the world. And even the markets that you're in, there's going to be micro markets like Detroit. Detroit has a very bad rep for real estate because there's a lot of crime, high crime. So I can go down one street in Detroit and it's an absolute war zone. I can go a mile over and it could be a great opportunity that's really starting to boom and really starting to come up. Now, the reason I started to get involved in real estate is because I'm looking to kind of supplement my income, since I do a lot of trading in cryptocurrency and I have money in cryptocurrency, but I don't like taking money out of cryptocurrency to pay the bills and to live off of. Whereas if I'm trading cryptocurrency, I want to keep growing my cryptocurrency trading portfolio and not so much tap into that all the time to access money to live. So I'm looking at real estate to kind of supplement my regular, or what would be a regular job, which I don't have, and use that to supplement my USD income. So last year I decided to buy a couple of deals. Up until that point I was just renting properties, and I realized, okay, you know, let's look into buying. I always look to rent because then I don't have to take care of the property, I don't have to do any maintenance, I don't have to deal with any of that. But as I started to look, when my lease was about to expire, I'm like, all right, maybe buying might be an option. Let's see how I could figure this out. So I did a couple of deals towards the end of 2018, and right now in 2019 I'm looking to do more. And my first goal in real estate was I need to find a place to live. I don't really want to rent. I want to figure out a way I could buy and live for free or relatively cheap. So my strategy was going to be buy a small multifamily property, something that's between 2 and 4 units, and I'm going to live in one and rent out the other units. I figured this would be a great strategy, where I'd have the tenants paying for basically my mortgage, and I would be able to live for practically free. So I looked and looked and looked. It took me about 3 months to find a deal on the MLS, which is the site where everybody could see all the listings. That's pretty much like the public trading area of real estate. So I find a deal on the MLS, and this took a long time. I probably went and saw 50 deals, looking at all the numbers, looking at different properties and stuff. It took a really long time, and it was pretty time consuming, but I was kind of a noob, and I still am kind of a noob, but now I have a little bit more experience behind me to move to the next level. But anyway, I started with a duplex. I found this duplex, and it was pretty much turnkey. Everything was fixed up. It was nice looking. But what I realized was the current owner was living in one unit, renting out the other, and he wasn't renting the unit out for what it could be rented out for. So I was going to move into this house, rent out the other unit, and figure out a way somehow to add value so it would pay off my mortgage. So I get this house under contract, and the day I got that property under contract, I stumbled across this house that also looked pretty good. It was in a little bit rougher shape, but I knew I could add value to it and increase the value of the house. So the same day I got that property under contract and I had my offer accepted, I went to go see this other house, which ultimately ended up being the one I'm currently in right now. It was a really good deal, and it was a really good find. I pretty much went there the day it was listed, and there was an offer already in there at the full market price. I put it an offer at $2,000 higher, and they ended up accepting me because I said I was putting down a higher down payment than the other offer, and they accepted it. So then I got 2 properties under contract, and one was a rehab, one was a duplex that was pretty much turnkey, and I decided I'm going to rent out this duplex and fix up this other house, live in it for a little bit, and then move on and rent it out or whatever. So this was all happening towards the end of 2018. I had this duplex. I realized I'm going to need to rent out one unit. My realtor and the owner figured that this duplex would probably rent for about $700 a month in one unit and $600 for the other. Said, all right, that's not bad. It's not terrible. So I listed the property. I started to find a tenant. But I listed it at $900 because I was looking at the comps, which are the comparables in the area, to see what are the other units renting for right now. And I decided to go a little bit higher because it was in really nice shape. It was in good condition. It was clean, really nice looking property. And within that first day, I had over 70 messages of people wanting to rent my property. So I took the listing off, and I'm like, all right, I got to raise the rent, but I'm going to have to justify it somehow. So again, this was a duplex. I already had the top unit rented. I was trying to rent the bottom unit. The top unit was bringing in about $600 a month. The bottom unit wasn't bringing in anything right now, and I was going to try and rent it. So what I decided to do was add internet. I went out and bought a modem, and I put it in the bottom unit, installed it. It cost me about $100, and I subscribed for Comcast internet, and I decided to give the upstairs unit guy a discount on the internet. He would access the internet for cheaper than it would be for him to install it himself. He would only have the Wi-Fi, but I would be able to charge him a little bit to use the internet. And I would also be able to justify raising the rent on the bottom unit a little bit more since it was including internet in that lease. So my strategy was, now I'm going to list this property for $1,000 a month instead of $900, since I had such great responses And since I was adding internet, I was adding value. This would make sure the tenant that was moving in wouldn't have to add an internet bill in their name. It was already included in the rent. So I ended up renting that duplex out for a total of $1,600 a month, getting $1,000 for the bottom unit and $600 for the top unit. And the mortgage on this house was $864 a month. So it was bringing in about $730-ish a month, and factoring in a little bit of expenses. It was cash flowing over $500 a month, and this was a turnkey property. I didn't have to do anything to it. I bought a modem, put it in there, placed a tenant in there. I paid someone to clean it, deep clean it. That cost me a couple $100, but now I have a cash flowing asset that I knew would pay for both houses. So I'm renting out this duplex, and it's covering the mortgage on the other house that I was buying and fixing up. So the other house, I ended up buying it and moving in there. It took about 2 months to fix up. I had to do paint and flooring and cleaning, getting appliances, fixing up the bathroom, just minor repairs. It wasn't a full gut job. It was just enough where I could dip my toes into real estate and see if this strategy would really work. So this strategy is also known as the BRRRR. I was planning to buy this property, rehab it, rent it out, refinance it, and then repeat. This is something I found on biggerpockets.com, which I highly recommend. I've gotten a lot of great information on that website regarding real estate. So here's some of the numbers I got on the house that I ended up purchasing that I had to do rehab on. And again, I was following the BRRRR strategy. I didn't exactly do it right because you're supposed to buy it with cash. I ended up going through traditional financing through a bank loan because that was the only option I had at the time, and I didn't have any previous mortgage, so I figured I'd be able to get a deal since I'm a first-time home buyer. But ideally, you want to purchase the property with cash and then refinance into a bank loan. I decided to go the bank loan route, and then I funded the rehab on my own. And I got a really good interest rate as well, 4.75 interest rate. So here's some of the numbers. I purchased it for $57,000. I put a 5% down payment. My loan is $54,150. Got a 4.75 interest rate. My mortgage, this includes insurance and taxes. It's $518 a month. I put in $15,000 in rehab. Again, I did flooring throughout the house. I redid the bathroom. I poured a patio in the back. I replaced sidewalk in the front and some steps in the front. I did doors, hinges, appliances, some plumbing, cleaning, just very minor stuff, putting in fixtures. And totally, I was into this property about $72,000. So I had the mortgage for $54,000. I put $15,000 of my own into the rehab, and now the property is worth $105,000, and it'll rent for about $1,100 a month in the area that I'm in. And again, I'm currently living in here, and that's because I have to, since I got a 5% down payment. I have to live in this house for a year before I could actually start renting it out. And I need a place to live. So my whole goal was this is my dipping my toes in real estate. I want to go through the entire process of rehabbing a house and doing all this work, finding a deal, because I wanted to get that confidence to start doing more deals. And I knew I wanted to get involved in real estate more now that I have a little bit more money, and I think I'm in a really, really great market in real estate. Now, the properties that I'm focused on are relatively cheap. You guys, where you guys are from, $57,000 purchasing a house might sound absolutely crazy and impossible, and it might be. It is in a lot of places, and I'm really lucky because, well, I wouldn't say lucky because I moved across the country to be in this area, and this is I'm near Detroit, Michigan. It's one of the lowest cost of living places in the entire United States. So my whole strategy is to find undervalue, under market properties that need work, properties that I could put in work myself. By that I mean hiring contractors to do the work for me. We fix it up, then we put a tenant in place, and then we refinance it into a bank loan. I'm able to pull all my money out of the deal. But with this particular strategy, it seemed to work really well in this house, so I know it's repeatable in my area. And again, it really depends on the area, because the whole goal here is to find cash flowing properties, and a lot of places in the US aren't going to cash flow. If your house costs $200,000 but it only rents for $1,000, it's not going to cash flow. And the whole point of me getting involved in real estate is to kind of supplement my USD income with cash flowing properties. So this particular property on a $518 mortgage payment, and it rents for $1,100 a month, well, it's going to cash flow $500-600 a month pretty easily. And even if I refinanced it and pulled all my money out, well, it's worth $105,000. Then it's still going to cash flow at $1,100. It's not going to be $500-600, but it'll probably be $200-300 for one house. And every time I get a rent check in the mail, it's also going towards the mortgage. So I'm building equity at the same time. And that's why I really wanted to start getting involved in real estate. This is a long-term plan. I'm not looking to actively flip houses. I'm still pretty much entirely focused on crypto. This is more a passive strategy. So my total profit for this house is about $33,000 that I have built up in equity. Again, the house is worth $105,000 right now. I purchased it for $57,000. I put $15,000 of my own money into it, and the difference between 105 and 72 is $33,000 in profit. And that's just sitting in the house. I could tap into that equity whenever I want through a refinance or through a HELOC, a home equity line of credit. I could access that money and then go and purchase more rental properties in the area. So my overall investment strategy for 2019 is going to be consisting of cryptocurrency and real estate. I'm not going to spread myself too thin outside of that. I do also think commodities as a whole are going to do very well over the coming years. But again, that's a slower market. In the stock market, I'm not looking to get too involved in that. I do have my Roth IRA account, my retirement account, that I'm always going to be looking to build because that is pretty much tax-free profit that you can make. But I'm not looking to sink a bunch of money into the stock market right now because I think it's in a very delicate area. And a lot of people are asking me, well, what about a recession? Aren't you concerned about a recession and the real estate market crashing? Well, in my area, not so much. And again, this is area by area. In California, it might be different. In New York, it might be different. In Australia, it might be different. But in Detroit, Michigan, where there is positive economic outlook, and you can find this by looking at what your city's 10-year plan is. I did that research and figured out the city that I'm investing in, or all the cities that I'm choosing to invest in, have a strategy for the next 10 years, and they're actually looking to improve the city in some way, whether that's creating jobs, lowering crime, creating a downtown, restoring a downtown area, whatever it may be. You need to find cities that have positive economic. Also, when you're investing in real estate, you need to look at job growth. These cities should be growing year after year, or at least creating more jobs. You want to look for big companies that are relocating there. Like where I'm at, right outside Detroit, we just had the Cadillac headquarters relocate here from New York, I believe it was. That's going to create a ton of jobs. We have the GM plant. We have the Chrysler plant. We have a few big car plants. Again, yeah, if the economy tanks and they all get laid off, sure, it's gonna hurt the values of the houses. But when you're investing for cash flow, and cash flow is the #1 criteria I want to focus on, not just appreciation, cash flow is king. I'm looking at properties that even if they do drop 10-20%, which is unlikely, but it's possible, even if they do drop 10-20%, they're still going to be renting positively for cash flow. And if I'm getting these properties under market value, which is what you have to do when you're running the numbers, make sure you're getting them really under market value, then you're going to be fine. And there's still going to be strong rental demand, and there's going to be more rental demand as the Fed hikes the interest rates. Interest rates have been going up over the past year. They're probably going to continue to go up. So yeah, it sucks if you're buying a property, you're getting a higher interest rate, but that's also going to kind of scare away other people or squeeze out other potential buyers, and they're going to be forced to rent because they won't be able to afford to buy a house, and that's going to create more rental demand. So I'm looking to invest in cities with strong rental demand that are showing strong economic job growth, strong economic positive economic demand, a positive overall city outlook in the next 5, 10, 15 years. And really that's about it. You got to make sure you run the numbers though on the properties, and I highly recommend going to biggerpockets.com to learn more. I'm not an expert on real estate. I have not had as much experience in real estate as I have in trading stocks and cryptocurrency, but it is something I want to get better at and use as a long-term investment strategy. So in 2019, I'm looking to buy a few more houses, get a few more rental properties under my belt, and be able to live passively off the cash flow from the rental properties while simultaneously building equity, trading cryptocurrency, and running one of the largest and most successful cryptocurrency trading communities in the world. So that's going to wrap it up for this video, guys. This is my investment strategy for 2019. It's nothing too fancy. I'm going to be doing a lot of the same stuff that I've always done, but I think you guys should also consider, if you haven't previously considered cryptocurrency or even real estate, if you're interested in either of those things, you know, drop a comment below or reach out to me. I'm happy to answer questions and help you guys where I can. If you did like this video, please leave me a like. And as always, subscribe to our channel for more mostly cryptocurrency related content, but occasionally we might have a video on real estate or stocks or any other hot topic that's going on in the markets. Alright guys, well, my name is Matthew from Crypto Traders Pro. You can find me at cryptotraderspro.com alongside Kurt and the rest of the Crypto Traders community. I hope you guys have a strategy in place for 2019, whether it's cryptocurrency, trading stocks, investing in gold, investing in commodities, investing in real estate. You need to be investing in something that is going to keep growing your money. Regardless if the market goes up, down, or sideways, you need to be looking at the best way to continue to grow your money. So this is Matthew from Crypto Traders Pro, and I'll see you on the moon.